All right. Welcome back, everyone. So we'll be talking about advanced market structure. So during the course of our last class, we discussed about the basic liquidity, where we talk about external liquidity. So from external liquidity, we proceed into market structure. So for that, let me quickly share my screen. Now, during the course of the last class, we said that markets targets all this liquidity. All right. Take one liquidity, take the other liquidity, take the other liquidity, and all that. Now, something you need to know is that that rule that I gave you, that market takes that says one external liquidity and take out the other external liquidity. That's for that's the second rule for external liquidity. The first rule for external liquidity is market takes out just one liquidity and take out another liquidity until it take, for instance, let me just explain it. Let me just give you guys practical. Now, on the higher time frame, there will be a liquidity that market wants to take. Now, market needs to take out this liquidity here. That means market needs to take out that set side liquidity above. But before market will do that, something should be happening in the lower time frame. It is in the lower time frame that market will then be taking out both sides of the liquidity. Take for instance, until market take out this main liquidity, this is what we'll be seeing in the lower time frame. Now, market want to take out this external liquidity, or this is the main external liquidity that market want to take out on the higher time frame. But the lower time frame, market will be taking out the opposite external liquidity in the lower time frame. Until market eventually take out that main liquidity on the higher time frame. So you can see that in the lower time frame, what happened? Market is here taking out both side, both liquidity. All right. So please and please, this one only applies on the lower time frame, not on the higher time frame. When I say higher time frame, the likes of the daily time frame or the 4 hour time frame, depending on the one that you want to use. All right, so that's for that. Let's go over to our advanced market structure. Now, we now understand that markets take out liquidity before it can then move to the direction we want to move to. Market keep on taking out liquidity. Now, it is because of all this liquidity that market is taking. That is what is giving us the formation of all these highs and lows we are seeing in the market. Take, for instance, in an uptrend, what is happening in an uptrend is that market is taking out just one particular type of liquidity, which is the buy side liquidity. Market is just taking out the buy side liquidity in an uptrend. All right. While in a downtrend, it will be the opposite. Market will be taking out sell side liquidity. So the reason why we're having uptrend and downtrend is because in the uptrend, market is just targeting the buy side liquidity. And the only reason why market will target buy side liquidity is when there's a buy side, an external buy side liquidity of an higher time frame that price ought to take out. Then after taking out that external liquidity, before markets will then change trend Let's say, for instance, this is the external liquidity here that market wants to take out. So after market take out that external liquidity, before you can then see your downtrend in a lower time frame. In which market will then be taking out set side liquidity over and over again until it gets to its what? To its destination. So until market gets to its destination, it will keep on taking just one type of liquidity over and over again, thereby giving us the formation of all these our higher highs, lower lows, lower lows, lower lows, higher highs, higher highs, higher highs. All right. So with that said, let's relate it with market structure very well. So the first thing that will happen when it comes to advanced market structure is the liquidity. All right. Markets will first of all provide liquidity. If your mic is turned on, please mute your mic so others will be able to hear me. So now market just rejected this particular level. All right. By rejecting this particular level, that means that liquidity have been created in this particular place. We now have liquidity resting at that particular level. After which, market will have to come and look for a market mechanics based on what we discussed during the last class. Market will have to come and look for a market mechanics, which is an internal liquidity that will fuel the market to push up to go and take out that liquidity that market just created. And by taking out that liquidity, what will happen? Market will then create another buy side liquidity at this particular level that is going to reject from again. So this is what gave us the formation of those our highs you see in the market. Is because of liquidity that is on that particular level that market came to take out, thereby giving us the formation of a new high. All right. So after market take out, first of all, market will have to provide liquidity at that particular place by rejecting that level. So there'll be a lot of people doing what? Selling from this particular level with their stop loss resting here. So market will have to come and undown those stop loss. So those stop loss of it are not that those money that the liquidity at this particular level now. Market needs to come and take off those liquidities. So this is the advance, first of all, the phase one, in which market will take out that liquidity. Now, after taking out that liquidity, that simply means that our phase two have happened, which is the complex market structure, the break of structure. And after which, market will then look for a particular level to reject from, which might be the internal liquidity of an higher time frame. And then when market do so, we then have our what? Come here. We then have our what? The formation of an I, which is our basic market structure. Because in basic market structure, we only talk about the identification of all these eyes of it and all that. By the complex market structure, then we talk about the break of structure, the market structure shifts and all that. Now in advanced market structure, that's why we talk about the liquidity. So where is the liquidity? The liquidity is the first thing that you most likely see after the formation of an eye. That's where your liquidity will appear. That's why your liquidity appear. Then it's left for market to go and take out that liquidity. Once market sweep that particular liquidity and closes above it, all right. Once market sweep that liquidity and closes above it, that's where we have our what? Our break of structure and market structure shift. Then after that, market will have to look for a particular level to actually reject from to give us our what? The formation of a new high. So all this is what give rise to all these our highs and our lows we see in the market. All right. So now let's talk about the case of a market structure shift. Perhaps market have gotten to its destination already. What will then happen? Market will have to start going to the other side. Remember, market take out what liquidity above to go and take out the other liquidity, right? So since market have gotten to its destination, market will no longer be taking out buy side liquidity anymore. Instead, market will now be hunting down sell side liquidity. Remember, since market was going up, this is our sell side liquidity that market will be dumping on the chart itself on the market. That price will be dumping. This is our sell side liquidity. And remember, during the last category that we focus more on the recent one. All right, all these are liquidity that market will be dumping in the market, which is what we regard as the trend line liquidity. All right. Don't worry. When we go back to complex market structure, you understand the trend line liquidity very well. But this what gave rise to our trend line liquidity. So now market is coming back. This is the liquidity, the sensor liquidity that is at this particular level. And since market has gotten to its destination, market will now be hunting down the opposite liquidity, which is the sell side liquidity, no longer the buy side liquidity anymore. So market, we have to come and take out this buy side, this sell side liquidity here. After taking it out, that's where we then have our market structure shift. All right. This is what gives rise to our market structure shift. When markets change the sequence of liquidity that is taken from taking buy side liquidity, then change to go and take out the other liquidity. Simply means that market have changed the pattern. So look at taking out buy side liquidity, start taking out sell side liquidity alongside. With that being said, we can then regard it as the first market structure shift. All right. Remember, this is the part one of advanced market structure. This is the part one of advanced market structure. The part two, everything will become clear. Before we talk about the main market structure, we have to discuss how liquidity affects the market structure itself before we can then move on to talk about advanced market structure. So, with that, just like what happened here, what we have after a market structure shift, we then have the formation of a new high. So over here, we have the formation of a new low rather. All right. And then what will happen, we'll then be waiting for market to come and take out that low. But first of all, after market have formed this low, savings that will now have a new set side liquidity. So these new set side liquidity in the market. And what will happen? Market will have to come and take out that set side liquidity. And by doing so, we now have our what? Our break of structure in this new trend. I believe you guys already know that the market structure is also known as the shade of character, all right? So from there, just like that, everything we now have the formation of a new low and then pull back, come down again, another formation of a new low. And you know that was a new low form. That simply means that liquidity will be deposited in the markets again. So market have to come and hunt it down just like that. So that's all regarding this first part of advanced market structure. You guys have any question regarding this one? You guys have any question regarding that first part of market structure? It's clear, right?
Yes.
Yes, it's
All
clear.
right. So now let's move on to the second part of market structure. Now, second part of market structure, it is the main part that I gave you guys, which was the second rule, in which market takes out external liquidity. I'm going to take out the other external liquidity. But before we do so, it will tap into an internal liquidity before moving on to go and take out the other external liquidity. Now, this is what I mean. So market takes out external liquidity and tap into internal liquidity before taking out the other external liquidity. Just like what I explained in our this thing. This is what I mean. All right, at this point, we now have our liquidity here. We now have a liquidity at this particular level. So market we take out that liquidity. Then by rejecting this particular level, a new liquidity will be what will be created. So since market have taken out this external liquidity, you need to take out the other external liquidity. Then tap into an internal liquidity before moving on to go and take out the other external liquidity. Now, the reason why I did not say it tap into internal liquidity first here is because most of the times market don't use to take out this liquidity here before coming over to take out this one. So the way the important thing is that it will first of all take out this liquidity here, this one here in particular. It will take out this one, then it will do what? Tap into internal liquidity, which should be at this particular level. Before taking out the other external liquidity. Now, the same scenario will also happen here. This particular place that market actually take out liquidity from, there might also be, there will always be a point of interest that price is actually reactive from. All right, and this will be there be the liquidity that price took out, then tap into internal liquidity before coming to go and take out the other external liquidity. But following the trend, this is an uptrend. Following that trend, the first liquidity that you want price to take is the set side liquidity before tapping into an internal liquidity to go and continue the trend. All right, so it will take out set side liquidity here, then tap into internal liquidity before taking out the other external liquidity. That's because your smart money guys not go just rush blindly into the market because everyone be buying, so there will be no sellers in the market. With that being said, they need to make some people to let go of their holdings in that particular market, make them start selling. And remember, when you hit stop loss when you are buying, it means that you have sold off. So the smart money guys, we then buy up all from market to move from this particular level down to this particular level. A lot of people will be selling off. So those ones will be a lot of orders before market will take care of this particular place. Those ones will be a lot of sell orders in the market that can be able to fill up the smart money to execute the smart money order. That's why after taking all this liquidity, what will happen? We most likely come around where the smart money guys order is, and from there you will execute those orders, and then boom, this sharp pump to the upside. All right. So this is basically your advanced SMC, your advanced market structure, and this is what usually happen each and every time in the market. Thereby giving us this structure in which we have our so I should say this should be enough for now. So now, what is happening here? This is basically the advanced market structure. Sorry for my drawing. I think I'm a little bit laggy. That's why. So what happened in this first one? This was the set side liquidity that market took out and did what? And tap into an internal liquidity over here before taking out the other external liquidity. Then you can see your set side liquidity over here and tap into Sorry about that. So tap into internal liquidity before push it to the upside again. The sell side liquidity. Now, in this particular case, what happened here? Even after having a liquidity to protect it, market still took out the other one. That's because market started reacting from an higher time frame point of interest. And because of that, that was bring us to the shade of character at this particular level. Then market provided liquidity, which now is not the buy side liquidity that market is now using. First of all, the buy side liquidity, then take out sell side liquidity. Buy side liquidity, take out sell side liquidity. So this is the advanced market structure of a 10. So the rules is simple. Market will take out the opposite liquidity of the trend. Take for instance, if it's an uptrend, the opposite liquidity of that particular uptrend will be the sell side liquidity. So market will take out that sell side liquidity because of your smart money guys that want to fill in their orders of a thing. Market have to take out that sell side liquidity before market will then push on to go and give you your normal break or structure. This is the break or structure in this one. This is the break or structure over here. As a break or structure over here. So before market will give us those break or structures, that means before market will take out those buy side liquidity, market has to take out sell side liquidity first of all before taking out the what the buy side liquidity for the market to be what to be balanced to fulfill that rule of external liquidity that says that market take out one external liquidity and take out the other external liquidity. So there must be a sell side liquidity that market will take before taking out the buy side liquidity and vice versa. All right. So this is all regarding the market structure of a thing. We can go. I think okay, there's no time anymore. If not, and I'll go over to the chart to actually show you guys some practical example of market taking out the buy side and the sell side liquidity. But perhaps during our next this then, all right, I'm coming. Let me see if I will be able to. All right, please just a moment. Let me quickly identify some of them. Okay, I'm unable to because of this network of a thing. So perhaps in our next class, I will show you guys some practical example of the market structure. Yeah, one market structure. Any questions so far?
Yes, sir, I have a question.
Yeah, go on.
Mm, The sell side, that's for an uptrend, the sell side liquidity that market is supposed to come and take out. Must we identify it on the higher time frame too as well? Or is
No.
fractal?
For your liquidity, you don't identify liquidity on the higher time frame. What you most likely see in the higher time frame is your basic market structure, which is your higher high, higher low, higher high, higher low. That's what you will see in the higher time frame. But the lower time frame, that's where you will see that price is taking out sell side liquidity in the lower time frame. Remember, we trade in the lower time frame, not in the higher time frame. That's even one of the reasons why we are target for the smart money guy, because the smart money guys, they don't look in the lower time frame, they look at the higher time frame. So they wait for market to come to their point, like wherever they want to use to take the trade. They wait for market to come there, and all this why market will be manipulated in the lower time frame. All right, before market will get to that their point in the higher time frame. But the higher time frame will just look like a normal higher high, higher low, higher high, higher low. But in the lower side, that's where you will see the liquidity, the sensor liquidity that market is taking out. All right.
Yes, sir, yes, sir. Thank you.
All right. So anyone have another question regarding what we did today? You guys understand it on our way?
Yes, yes, sir.
All right. All right. With that said, thanks everyone. We continue tomorrow with internal liquidity and advanced market mechanics.
Thank you, sir.
All right.